Hey, what's up, guys? It's Jose Rodriguez, the credit dude, here with Got Credit, wanting to explain to you a little bit about the myths when it comes to credit score. So have you ever heard the expression, I don't really need a credit score, my credit doesn't matter, I don't really need a credit score? Well, here I am to bring you the truth and the reality of what really impacts you when it comes to a credit score and ultimately why it matters. For 2026, there's going to be a lot of shifts and a lot of things happening, not only in the credit world, but also in the financial space, and also when it comes to jobs, and just also when it comes to investments and things that people want to do with their money. It does also pertain to your credit. So let's dive right in and let's talk about, honestly, the big picture and what is a credit score really? Like, what is this three-digit number that gurus like myself talk about on social media, at events, and why do banks grade you and judge you on a three-digit number that we weren't really taught either growing up or in high school or in college even for that matter? So a credit score is pretty much a risk or your risk of going 90 days late or more in the next 2 years. And that's pretty much what they're grading you on, okay? And your credit score is used to get approved for a mortgage, to get approved for a car, credit cards, loans, things like that. And even though a job can actually check your credit, they will never know what your credit score is. When you're applying with the job, they can actually know what's on your credit report, but they'll never really know what's on or what is your credit score, whether it's a 380 or 700. And credit scores do range from 300 to 850. You're never going to have a 200, and typically you can never go over 850. So what you want to do is always strive to have as close as possible to 850 as you can, whether that's 680, 700. One of the biggest things when it comes to credit scores is maintaining it above a 720, 750 for years to come. So you probably heard of Fico and Vantage scores. So Fico is your traditional credit score that's ran by mortgage lenders and auto loan lenders and credit card companies. But over the last couple of years, VantageScore has been having a little bit of traction when it comes to lenders. And this is just a credit score that was pretty much created by Equifax, Experian, and TransUnion. If you do have a Credit Karma score, this is the Vantage score, okay? The FICO score is a little bit different. And the reason why your Vantage score is free with Credit Karma is because every time you apply for a credit card on Credit Karma, they get paid. So it's a pretty good business model, if you ask me. They're giving you something free and getting paid in the back end, all right? So let's talk about the 5 things that really affect your credit score the most. Okay, it's payment history, debt utilization, time in file, your mixture of credit, and also the amount of times you check your credit, better known as credit increase. All right, so let's dive into the first myth. All right, the first myth that I hear is that closing old accounts hurts your score. I want to break this down because a lot of people think that either it hurts you or helps you, or closing an account helps your credit score. And I can tell you that anytime you close any account on your credit report, it's going to hurt you no matter what, unless you're doing something to rebound some of those scores. If you close, let's say you pay off your mortgage. You pay off your mortgage, your score is going to drop. If you pay off your auto loan, your credit score is going to drop. But that doesn't mean you don't want to do those things, okay? And if a credit card closes because of inactivity, or because you close a credit card because you think you don't need it, because you don't want to pay the annual fee, now what happens is your debt utilization or your credit utilization is also going to drop as well. So now what happens is, let's say if you had a credit card and you had a $5,000 limit on it and you close it, and let's say your overall credit limits were $30,000. Now your overall credit limits go from 30 to 25. And even though that credit card has a zero balance, being that you close that card, you're now shrinking and losing the available credit, which does affect your total credit score. And that is actually 30% of your credit score. So it's a lot of points, okay? Now, one thing you can do if you know that you're going to pay off your house, pay off your car, or close a credit card is try to get credit limit increases elsewhere to increase the available credit that you have. And that's going to ultimately get you some more points, or you might not lose anything, which is going to be great. And it sucks because we hear from clients all the time, hey man, I just paid off my car. Why did my score drop? I thought I did something good. You did, but it's all about playing the game, and it's all about playing the FICO game and the credit scoring game. And anytime you close an account, it does hurt your score. So with this myth, it actually is true. Closing old accounts or any account does hurt your score. But I don't want you to think that there's not an opportunity for you to close a score, for you to close a credit card, because it might be needed depending on the situation. Let's go to now myth number 2. Okay, carrying a balance helps your credit. I don't know why people think that having a credit balance on your credit score or your credit card is the best thing. One of my teachers and one of my mentors that taught me, John Alzheimer, the one thing he always said is if you have 1% balance on your credit card, that is what's going to maximize your points. Not $10, not $20, not 5%. It's 1%. So the magic number is, if you do want to play this game and if you do want to maximize the points in this category, is 1% is the magic trick. Okay, so we'll take your credit limit and just 1% of that before you pay off your card, before the statement date, leave it at 1%. Me preferably, I tell people pay off as much as you can, because when it comes to you fixing, building, and maintaining a high credit score, you don't want to play the game of forgetting to pay a card down, and then now you got to wait 30 to 45 days for that balance to pretty much go down again. Okay, so if you have the means and you have the money, get used to paying off your credit cards in full every month. And then once you start maximizing your credit score and you're obtaining things with your credit, then play the 1% game, and you'll be in a better position down the road, because now you're a little bit more financially responsible. But as long as you're paying your credit cards off in full every month, you're good to go. So don't think that just by carrying a balance, 10, 20% of it, or leave it at 30%, the more you pay it down, the higher your credit score is going to be, okay? Now let's go to number 3. I think just people don't know where to go for this one or how to do it. And the myth number 3 is checking your own credit report or credit score is going to hurt you. The great thing is that it doesn't. So now if you go to a mortgage company, let's say if you go to an auto loan company, you apply with Capital One, American Express, things like that, those inquiries are harder inquiries, and they do appear in your credit report. The great thing is, though, is anytime you're checking your credit for an auto loan or a mortgage, it does not affect your credit score for the first 30 days. It's a good thing, because it means, the credit scoring algorithms are actually giving you a little bit of a break, and they're giving you a little bit of a chance to shop around. But if you do apply for a credit card, that will affect you day one, okay, the same day. So don't go too crazy with applying for an auto loan, and don't go too crazy with applying for a mortgage if you're not ready to get approved. And this is why checking your credit is the most important thing before you do apply, because you can check your credit score every single day for a year and nothing's going to happen. So that's why we always recommend Identity IQ or MyScore IQ with checking your credit scores. You can go to www.gotcreditmonitoring.com, check your credit scores for $1. You'll be able to see what's on there. And you want to know what you're doing to get to that 850 credit score, like I said in the beginning, because how do you know where you're at or where you want to go if you're not seeing where you currently are right now? So checking your credit report and checking your credit score every single month is one of the most important things you can do. Because wouldn't it be better if you go to a mortgage company, or you're going to have a car company run your credit, or a bank, and you know exactly what's on your credit report? Too many times we'll hear people saying, man, I didn't know I had this on my credit report. I didn't know I had this. And, unfortunately, Credit Karma only checks Equifax and TransUnion, so it's also missing Experian, okay? And the great thing is, with Identity IQ and MyScore IQ, it does update every 30 days, so you can refresh it and have a fresh credit report. And that's what we use for our clients. And it's actually a really great credit monitoring system, because it allows you to see what's on there real time and gives you updates. And that's the most important thing. You can go to annualcreditreport.com to get a free credit report, but it doesn't update. It's a stagnant credit report, and it does not give you a score, okay? So any changes or any updates, you're not going to be privy to it, okay? So honestly, guys, credit scores do matter. Credit reports do matter. We've helped celebrities, we've helped millionaires, we've helped people that, are teachers, we've helped police officers, we've helped, local people in the community, government employees, military. We've helped everybody. And the one thing that the banks don't really care about is how much money you make. What they really care about ultimately, if you're applying for something that revolves around a credit score, is your credit score. That's what they care about. Okay, so it doesn't matter if you're a millionaire or if you make $50,000 a year. or if you make $500,000 a year, your credit score is going to be the determining factor when it comes to you applying for something that involves checking your credit report, okay? So listen, payment history is king, and it's the most important thing you can do to maintain a positive credit history and a high credit score. So as long as you're paying your bills on time, it's not the only thing you have to do, but as long as you're paying your credit cards on time, your mortgage on time every single month, and even if you have maxed out credit cards, you can come back to that later, okay? When maybe you lost your job, maybe you were injured, maybe you had an emergency and you weren't able to pay off your credit cards in full, it's better to just make the minimum payment than to go ahead and not make the minimum payment. Now you have a late payment. You're not going to rebound from a late payment, okay? But you can rebound from having maxed out credit cards, all right? So just make sure you have a healthy mix also of things that are on your credit report, all right? Make sure if you're looking to maximize your credit scores and maximize the points, just have a good mixture. Have a car, credit card, auto, mortgage, student loan, things like that. Show the banks that you're responsible. I can tell you that once you start getting credit limits in the 1,000, 5,000, 10,000, just keep those balances low, request credit limit increases, and then every 6 to 12 months, apply for a high limit credit card, and you'll be good to go. So that's it for today. I hope that these 3 myths allowed you to understand a little bit more about credit. If you have any questions, go ahead and drop them down in the comment section below. I would love to interact and love to comment with you. And also, don't forget to subscribe to my YouTube channel. Hit the notification bell so that way when I drop new videos, you can be alerted right away. All right, guys, on to the next one. Peace.